What's up guys, Jake here. In today's video, we're going to do another update to my brokerage account challenge. In the event you haven't seen my prior videos, I will include the playlist down below so you can catch up. But it is me versus that total stock market index fund. We started the challenge on January 1st of this year. The positions in this video are current as of March 31st. This is trading day 61 of 252 for the year. And the S&P 500 got so close to hitting 4,000 today. I was watching it and at 1:30 p.m. it hit 3,992 and then it kind of sloped back down. However, by the time you watch this video, maybe it's gone above 4,000, so that's a lot to celebrate. And the total stock market index fund is up 6.96% or $1.74 from its starting position of $25. And I am currently up 43.4% or about $10,849 since my starting account balance of $25,000. These are my positions as of my last update video from March 29th. You can pause the video if you want to look at my cost basis or whatever. And it has changed to this. Now, there's not going to be a lot of changes. I still only have stock, 38 shares in Apple. The rest are call contracts. All in all, I have 14 positions open with 14 call contracts, and I've only added one position. I didn't sell anything because I'm actually pretty happy with all the positions that I'm in currently. I feel confident that they should keep uptrending or rebound to a certain price target before I want to sell the call contract. And the only position that I've added is actually Home Depot. And I actually bought a call contract on Home Depot and then sold it once it returned to its resting price amounts where it was basically 2 weeks ago. However, Home Depot is in a breakout, and you can thank the $1,400 stimulus checks or the booming housing market, but it looks like Home Depot has been able to break through this resistance. So 2 weeks ago, I bought a call contract on Home Depot. I waited until it got back to 290, which is where it's been resting since basically September or August of last year. However, it's gone above 300. It's currently at 305, and this means it's in a breakout. So this is what you want to look for. These are the perfect stocks to trade options on, or if you want to buy and hold long term, this is when you get in the stock. Home Depot stock bottomed out like all the other stocks did last March or April. It then uptrended huge for about a couple months as people were seeing this as the obvious COVID play. Everybody is staying home. Everybody needs to convert their home into either a school area for their children or a home office to telework from. Sales and revenue were great for Home Depot. It then started trading sideways for over half a year, and it hovered around this 280, 290 price mark. And it finally broke through. It broke through this week on the news of stimulus and the fact that the housing market is still booming, and it's probably going to continue well through the summer as people keep adapting to this new teleworking lifestyle. It's probably not going to get back to normal, or we might never go back to normal for a lot of companies. I think in the near future, people are going to continue maybe teleworking 3 days a week and only coming into the office 2. So people definitely need a place in their home to do their job. Home Depot's fundamentals are fantastic. When we look at their revenue, you can see how much it's shot up in the last year because of the pandemic. When we go to net income, once again, it's been growing every quarter after quarter. For shares outstanding, this is really important. We don't want Home Depot issuing new stock, and it looks like they haven't done that. They've been holding steady the last 4 quarters, but they've been aggressively buying back shares the last 10 years. And then let's look at the price ratios, because this is really important, whether or not Home Depot resting for over 6 months improved the price ratios. And the first one is P to E, and you can see it's actually pretty high at 25, but compared to everything else in the market right now, I think people are going to give it a pass, being over 20. Price to free cash flow, Home Depot is currently valued at 20, but in the past it's been as high as 18, 19, 22. So I actually feel pretty good about this price to free cash flow in this market. But ultimately, it's these technicals that you cannot ignore. The fundamentals are still good in my opinion, But the technicals, with this breakout, the 20, the 50, the 100, and the 200 have now lined up. This purple line is the 200 as it slowly dragged up to catch up to the share price. As soon as the share price fell through the 200-day, it basically was time. The stock was well rested. There's nothing wrong with Home Depot. There's no bad news. So it was due for a breakout, and it finally happened this week. So I sold a call contract, a week ago for a profit. I jumped back in. So I have the expiration date of August 20th. It cost me $1,660. Strike price of $305. It's actually already gone above it. And my break-even price is $321.60. And where do I see Home Depot stock going? At least $320 or maybe even $330 before it starts resting again. But I love this stock. This is a moneymaker. So these are the 14 call contracts that I'm currently holding. Once again, Costco, Apple, Walmart, and Dollar General are currently down from their all-time high. I bought the dip hoping that they would recover. And for all of these others, they're currently uptrending. And I'm either going to hold them, I'm going to hold the contracts either until a month before they expire or until it's evident that the trend has been halting. And actually, for a lot of these financial stocks like Synchrony Financial or the insurance companies like Aflac and Allstate, they have been trading sideways for several weeks now, and it's making me nervous that the trend has halted. So with those stocks, I am going to reevaluate them soon and see if the uptrend for these stocks has halted. However, for all my positions, I'm feeling pretty confident that April is going to be a very good month. The reason why is historically April is the best performing month of the stock market. Why is this? There's a couple different reasons, but one of them is when fund managers buy stocks, they usually price in the next 9 months worth of sales, revenue, growth, whatever. And when you purchase stocks in the late spring, you're factoring in sales for the summer and the holiday season. So the stock market always does pretty good in the month of April because once again, you're pricing in the next 9 months. So on that 9-month plan or model, when do stocks usually not do as good? They don't usually do as good in the fall. In September, October, that's usually when crashes or dips or the stock market starts to struggle. So April, May, I'm feeling pretty good about my positions. And I watched a segment on Cramer's Mad Money where he was talking about this noted trader, Larry Williams, who observed something called the Easter Rally, where essential retailers, certain companies like Costco, Amazon, and Walmart, they always go up. The stock price for like the last 30 years, they always go up the day before Easter weekend and the day after Easter weekend. Why? Once again, you could say, well, they're factoring in the summer and the holiday sales 9 months in advance. Doesn't matter why. Just the fact that people know about this and people are talking about this alone can cause other people to flood into these stocks to buy them and to scare away the short sellers in the near term. So yeah, I mean, it's nice that 2 weeks ago I already got into Costco and Walmart, so I'm hoping for huge pops over Easter weekend for these stocks. So as I see it right now, I have 4 essential retailers. I've got Costco, Walmart, Dollar General, Home Depot. I see these doing pretty well this month. And then I really like my industrial stocks that I've chosen, these defense contractors. The fact that they lagged behind the other industrials when there was no reason why. Their fundamentals were great. So what am I expecting from these stocks? And let's go ahead and say that all the financials and insurance companies that I'm holding stall out. Let's say that Apple doesn't start uptrending again until this summer. What am I expecting from these call contracts that I'm holding? And these are conservative numbers. $2,000 additional on top of what I've already made from Costco, $1,200 for Walmart, $800 for Dollar General, $4,500 for Huntington. Once again, this is where their price has been pre-pandemic for the defense contractors, and where I think, based on their prior valuations, they should be in the near term. The defense contractors have all started uptrending. So Huntington, General Dynamics, Northrop Grumman, and Lockheed Martin, Those are expensive call contracts, but the potential there is huge, which is causing me to think about this. Like, is this game over for this challenge? I started the year January 21st with 25,000 with the goal by the end of the year of just beating an index fund. But my grander ambition was to double my money. And realistically, I think that's going to happen this month. I'm making a prediction. This is the beginning of April, but by the end of April, I think that I will have hit my account balance with Schwab of $50,000. So this is where I was on March 5th. I had 26,800. I was up 7.2%, feeling pretty good about that. So I was up 1,800 on March 5th, and 3 weeks later, basically, I was up 10,800. And I feel honestly more confident now about my positions than I did a month ago. Like, I like what I'm holding currently even more than what I was holding a month ago to have this month's performance. So in my mind, I'm already starting to anticipate and plan for what's next. I don't want to just keep going. You know, if I reach an account balance of $50,000, I don't want to keep this up. One, this is very speculative, very risky trading that I'm doing right now. I feel like I don't want to glamorize this at all for you guys, for anybody watching this. I don't want to say, hey, you should do this, or I recommend this. Obviously, anything I buy a call contract on, I think is a good stock, which means if you want to buy the stock, which is a much less risky form of investing, with a call contract, if there was an unexpected event, you know, the Suez Canal getting blocked or something crazy or like a natural disaster, and the stock market just tanks, the value of all these contracts goes to zero. I mean, it goes down real fast if all these stocks just crater. Now, I try to minimize that. I try to minimize the risk of my option plays by only trading Fortune 500 companies with good fundamentals. I don't think there's as great a downside or risk as maybe buying call contracts on smaller cap stocks or tech stocks that don't have proven fundamentals yet. So I also buy contracts that are 6 months out, 4 to 6 months. So in the event there is like a flash crash due to some kind of current event that's unforeseen, at least I have time for it to potentially recover, and I don't lose as much. But the last month especially, this is not normal. This is not normal investing. This is not disciplined investing. I don't want to give you guys the wrong impression of what I've been doing here, and if I hit 50,000 this month, I don't want to continue this. I'm just being honest with you guys now. I probably will do some minor options trading, but I would like to pivot and maybe start a new challenge where I focus on a different style of investing. I previously mentioned in videos I wanted to do a series on value investing, and that might be my next focus on this channel, getting more away from the options plays. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. If you have any comments or questions or any ideas what I should do next if this challenge wraps up, let me know in a comment down below. And until the next video, take care.